I would like now to introduce today's presenters. Rahul Gehani, partner, a member of the pricing assurance team. He assists clients on topics related to price and contract benchmarking, strategic engagement reviews, and sourcing cost rationalization. Ricky Sandrani, Vice President, is a member of the pricing assurance team and assists clients on topics related to price benchmarking, solution review, and contract assessment for IT infrastructure, ADM, and system integration services. Kumar Avijit, Practice Director, leads the cloud and infrastructure practice and assists clients on syndicated and custom research engagements on topics related to cloud, infrastructure, network, and security services. And with that, I would like to turn things over to Ricky.
Perfect. Thank you so much today for joining in, and welcome everyone to the webinar. So today we're going to talk about a topic which has been in a lot of news over the last couple of years, cybersecurity, right? Ever since the pandemic hit, we've seen organizations embrace remote working and large-scale migration in the movement to cloud, right? But both of these initiatives require a strong cybersecurity foundation if these initiatives have to be successful. That's what we plan to cover today as part of this webinar, right? To start with some of the key macroeconomic factors impacting the global services industry and how does it really impact the cybersecurity services market particularly. We will then touch base on the current cybersecurity state of the market to answer questions such as which areas in the industries are seeing maximum adoption and spend. And finally, we will end with some of the key tenets observed when it comes to buying outsourced cybersecurity services. With that, let's get started. So we've all seen the headlines, right? And cybersecurity attacks are on the rise, and much of this is linked to the rise in remote work and company employees working outside their office networks. The widespread impact of the nation-state attack on SolarWinds, followed by the record-setting ransomware attacks on critical industrial sites like Colonial Pipeline and meat processing firm JBS, has raised tough conversations, right, for global business leaders. For example, the hack that took down the largest fuel pipeline in the US and led to shortages across the East Coast was a result of a single compromised password. Yes, just single compromised password, according to a report. The hackers gained entry into the networks of the Colonial Pipeline company through a virtual private network. And that VPN account, as reports suggest, led to the compromise did not use a simple cybersecurity protocol, which is the multi-factor authentication. Now, having said that, and we've all seen cybersecurity attacks on the rise, the only silver lining I would say to this is following the surge of supply chain attacks and ransomware over the past year, enterprise leaders are now finally giving cybersecurity the attention it really deserves, right? So the threat of cybersecurity risk has finally moved out of the security operations center and has now become a priority topic of discussion inside corporate boardrooms and the C-suite of major global enterprises. And we have some of our own data to corroborate this fact. Rahul will talk about that in the coming page.
Yeah, so in general, the impact of and the importance of cybersecurity, when it comes to the priority and the focus areas for all enterprises, that has in general received a lot of focus, a lot of increase in the visibility from at various levels, be it at the board level, be it at the level of the chief information officer, the chief security officer, so on and so forth. In general, be it, let's say, over the last couple of years, or even in the recent studies that we as Everest Group have done, cybersecurity in general figures pretty much in the top 5. In fact, in the recent studies, it has figured in the top 2 capability priorities for all enterprises. So completely agree with what Ricky mentioned. Now, with regard to the the implications of this high priority being accorded to cybersecurity, by all enterprises. What makes the situation even more complex is that, if we look at the talent situation in the market, as we have discussed in some of the previous webinars as well, it is an extremely difficult task today for enterprises to get good quality resources. And the same applies even when they're outsourcing certain services to service providers. Even service providers in today's times have a lot of difficulty getting good quality talent. Now, this is especially true for an in-demand and a next-gen and evolving area like cybersecurity. An interesting point to mention on that front is that the talent shortage issue is not a flash in the pan, and it will not go away anytime soon. In fact, as our key issue studies conducted in the previous years also showed, even earlier, getting access to good talent was a challenge, though it was not the number one challenge then. Obviously, that has changed in the current situation in the current market, and the talent has jumped to becoming the number one challenge for all enterprises. Looking ahead, even though there might be a little bit of recalibration, reordering of, what are the top challenges for any enterprise, it might be that, okay, talent may not remain as the number one challenge, but we still believe that, it will always be in the top 3 or the top 5 of challenges in years to come. In fact, if we kind of move on to the next slide as well, if you look at the root causes of why the talent shortage exists, there are various reasons, starting from loss of productivity and lack of sustainability of the remote model that the world had migrated to over the last couple of years. The challenges, the reasons also include an inability to close the open positions due to a rapid rise in salaries. And on top of that, offers which are getting made, they are not getting accepted. But at the very top, the reasons are firstly inability to find the right resources, which has been observed by close to 70% of the respondents in one of our recent polls. And along with that, heightened attrition levels, which have been observed by more than half of the respondents. While these challenges exist in the broader industry as well, for cybersecurity, the problem is made even worse by the fact that security skill sets are not what they were about 10 to 15 years back. What was earlier supposed to be a homogeneous set of skills that were uniform across different organizations, that has gradually transformed into a situation where today cybersecurity is a much wider function, and there's a vast range of skills that are embedded in it. Let me ask Abhijit. Abhijit, can you throw some light on what the cybersecurity landscape today looks like?
Thanks. Thanks, Rahul. So, in terms of the cybersecurity landscape, at an enterprise level, it was all about securing your perimeter probably 3-4 years back, which primarily included, securing your network. And as part of your network security component, there were things like firewalls, network intrusion prevention systems, network detection system, and so forth. The main idea was to secure your corporate network, which was the heartbeat of the organization, and further, critically ensure that the stored data and the applications are safe from any outside attack. Having said that, the enterprise cybersecurity landscape is shifting from a perimeter-led control to a next-gen cybersecurity control, where the more focus is on cloud security, data security. And as part of cloud security, it's about having the same best practices on-prem as well as on cloud, securing workloads on the cloud, having the right configuration on the cloud, and so forth. In terms of data security, it's not just about securing the data in transit or data in rest, but also securing data in processing as well. Having talked about these next gen things with pandemic and digital transformation combined together, there is a proliferation of endpoints leading to endpoints such as desktop, mobile servers being part of the corporate network, or the network being expanded. Further, securing these endpoints are critical from an enterprise enterprises cybersecurity landscape perspective. So is the proliferation of IoT sensor devices, where IoT monitoring and IoT device data is catching importance. Having said that, identity and access management, risk management and compliance, and application security, a couple of other definition area from an enterprise cybersecurity landscape. From our definition perspective, also the way we look at market, these are the key segments. And if you see these segments, we see that major technology vendors on the next slide, which we have highlighted, are shaping the market. So if you see cloud security, the hyperscalers are the ones who are majorly investing and driving growth. So by offering by developing security specific offering, and I can quote a couple of examples: AWS with its cybersecurity competency, and these are close to 25 service offerings from AWS, which caters to cybersecurity for securing a workload on the cloud. Similarly, Microsoft with its E365 licensing, Microsoft services, and Azure security wants to cater to 45 use cases of security. So the investments are there. Similarly, Google has a distinct approach out there in the market, where they are inorganically growing and adding organizations which give them capabilities like the Chronicle, which is their SIEM, which came as part of the acquisition, the Beyond Trust, Zero Trust platform, which they have, and the latest Maintained acquisition, which is focused on the incident response per se. In the cybersecurity landscape, that's critical. And you see, for specific use cases, enterprise tend to prefer specific product vendors out there. I can talk about a recent interaction where in the identity and access management area, we see a bunch of technology vendors being proliferated just because of the use case they are solving and the use case they're solving best. So let's say for internal authentication, SailPoint is a preferred technology vendor. For customer facing application, it is ForgeRock. For single sign-on or SSO, it's Okta. And for privileged and access management, it is CyberArk. Again, these vendors bring niche capabilities. And talking about niche capability, OT security is a niche area which has been shaped by the likes of Clarity, Nozomi, and Dragos. What they have, which differentiates them from others, is the fact that they understand these markets and these segments better than a couple of major players who are more broad-based, having a better threat landscape and understanding of OT security, and combining that with the industry-specific challenges. Let's say for OT in the manufacturing segment, it's more about asset discovery as a key challenge, and in the energy and utility, it is about securing yourself from ransomware attacks as a key challenge, which these enterprises are catering. So proliferation of technology vendors is what we majorly see in the cybersecurity landscape. Just going back to the talent point which you make, Rahul, I would like to highlight that the talent pyramid for cybersecurity is inverting, and next gen cybersecurity on the next slide, if we see, require an inverted pyramid structure, which is contrary to the larger IT security services pyramid structure which is out there. What we see is that in terms of your alert investigators, which were probably working on monitoring solutions or configuration of security devices or threat investigation, are moving towards doing high level tasks such as identifying the nature of attack, working on identifying threat actors, arriving at a decision on the containment strategy. How does the enterprise look to leverage this? Is that enterprises are getting SMEs with experience and knowledge to focus on threat hunting, pen testing, and cyber forensics. And these skills are the ones which are hot in the market. You see a lot of openings out there in the market for these skills. The skill shortage is so much that enterprises are relying more and more on their outsourced service providers rather than getting these skills fulfilled. As part of these specific skills, what it helps to do in a managed security construct is that a larger specialist skill base of threat hunters or SMEs also allows you to document your cybersecurity knowledge and have it readily available for new team members. So it helps in your reskilling journey and also helps you to better exploit the techniques which you have used in the past and recognize common pattern to thwart future cyber attack. I'll hand it over to you, Rahul, and why don't you throw some light on the cybersecurity market and how, and point out how it is changing or has shifted in the recent times. You are on mute, Rahul.
Sorry about that. So interestingly on that, as we transition into the next section, for a moment, if we just pause and again look back about 5 to 7 years, historically security was supposed to be a tower that was part of the overall IT infrastructure estate of any enterprise. Elements like firewalls used to be hidden within the network tower. Services around antivirus management used to be hidden in the end user computing tower. So compared to that, if we move on to the next slide, in today's times, the way cybersecurity is being looked at is different, Abhijit. So again, maybe some perspective from you on how we have seen this getting evolved since the COVID times till today.
Sure, and let me just narrow it down and talk about the last 2 years and what's the shift which is happening. So as Ricky pointed out, ransomware attacks, supply chain attack, they are not going to go away. In fact, critical infrastructure like Colonial Pipeline, which got hacked by one account not using multi-factor authentication, it is something which is a reality in today's world, and enterprises and especially boardrooms have realized that, and they have set up their strategies and they have set up their playbooks in responding to these particular attacks, or they have realized that these attacks will not go away, and hence what they've done is that first thing they've identified is the key risk which is part of their business operation. So cyber risk quantification is something which is all enterprises are looking to gauge at and trying to identify how what is the dollar value of their cyber risk based on their top business operation, and trying to see what's their exposure in terms of these attacks would be. Secondly, I would say that there is a greater focus on cyber recovery and resiliency. Having said that, this is not something new. Organization always had a business continuity plan as part of their operations. However, that shift is from business continuity to be more to cyber resiliency, where organizations are not thinking it from a response perspective, but a recovery perspective, and hence the shift is and hence the difference in BCP, which erstwhile was an approach which is not very comprehensive, which is just aligned to a few business functions, look the organization as silos, also lacked preparedness from the perspective that in case of a cyber event, it could also it did not consider the fact that it could also make my backups and recovery solution not function right, and hence what they have done is that there is a greater focus on having cloud-based backup and recovery solution and implementing a modern day recovery process, so that there is a rapid recovery happening in the organization from a cyber attack. So those are a couple of things which we see majorly shifting in the last 6 to 8 months in all our recent conversation. A broader shift is also happening in the in the way enterprises approach cybersecurity. This is probably a long journey, and zero trust security framework, you call it a security approach or your security strategies, something which is emerging. This is not something new. What we saw, what we understand is that it was initially started by the US defense system, Department of Defense, and Defense Information System Agency, DISA, where they wanted to move from a perimeter based security to a perimeter less security, and shifting to a transaction based security. So their core principle was continuous trust evaluation, secure access to resource, as well as granting least privileges. We've seen greater uptick on zero trust because more and more organizations are realizing that the cyber attacks are getting more sophisticated. They're not going to go away. Cloud is the de facto infrastructure right now, and cloud penetration is increasing in organization, which is driving them to think towards a zero trust based architecture. Also, organizations are looking to shrink, and the earlier security which Perimeter used to offer is also shrinking, and hence zero trust is the default gateway. Interestingly, from a services point of view, we see MDR/XDR services being on a greater rise. Typically, if you look at smaller organizations who don't have the right budget or the right skill set from a cybersecurity function per se, they want 24/7 monitoring with threat intelligence, threat hunting, and incident response facilities, which is typically which an MDR/XDR service offers and tries to cater to the market demand. So these are a couple of quick things which we see from the market perspective. And moving to the next slide, please.
Yep. Thanks, Abhijit, for explaining these developments. Let's run a poll now and get some inputs from the participants, on what they see as key cybersecurity focus areas for their organizations. You will see a wide range of segments in this poll. Please select all the segments that you believe your organization is focusing on this year. And just to be clear, you can select more than one segment. All right, there are a good number of responses already. We can give a few more seconds for others to submit the responses. Okay, 3, 2, 1. Okay, then let's close the result. Let's close the poll. Okay, so what we see is we are seeing maximum focus coming on cloud security and data security, a little bit less on identity and access management, endpoint security, and at the bottom we see kind of network security, application security, IT and OT security. Abhijit, what do you think about these results? In line with what you were expecting or different? You're on mute, Abhijit. Okay. Any perspectives, Abhijit, on this one? We have a bit of a mic problem, it seems. Okay. Let's do one thing. Let's move to the next slide. Yeah. So compared to what the poll indicates, in general, what we see is that the enterprise spend on IoT, OT, cloud, and data security, they are some of the leading growth segments among cybersecurity functions. However, when it comes to the current penetration, the current situation, we actually see that some of the traditional security functions around network security, identity and access management, application security, risk and compliance, these actually form a larger chunk of the overall spend that enterprises have on cybersecurity. So it's those emerging functions around cloud and IoT and OT, which are less prevalent right now. They are the ones which are kind of seeing maximum growth and traction. As the chart indicates, when it comes to data security, cloud security, IoT, OT, we are seeing we're expecting a CAGR of anywhere between 23 to 30%, whereas for some of the more mature and established functions, the CAGR is a little bit on the lower side, ranging from 10 to 16%. In general, this can be attributed to themes, in the current market, which are leading to increase in demand. These themes include connected ecosystems and workplaces, proliferation of endpoints, like Abhijit mentioned earlier, newer formats such as cyber risk quantification, managing of hybrid identities, as well as edge security. I think we have Abhijit back now. Abhijit, let me hand it over back to you. Some network problems. Let's move on to the next slide. Yeah. So in continuation of the previous slide, what is also interesting to point out is that, while there are those segments and demand generators that we're seeing in the industry overall, it is not as if it's one cohesive and consistent set of drivers which are observed in in all the geographic locations in different parts of the world. So we're seeing different themes emerging in different parts, which are leading to spurt in demand for cybersecurity. Like Abhijit mentioned, in North America, it's those themes are zero trust and OT security, ransomware, and cyber risk assessment. But if we kind of move over to a different region, for example, Europe and UK, there the main generators of demand are basically data security, privacy, GDPR compliance, cloud security, as well as automotive security is a big reason in Europe and UK. In APAC, we kind of see a lot of focus on cloud security, next gen SOC services, and MDR. And in other parts of the world, for example, LATAM, we see next generation SIM and SOAR, as well as analytics-based detection, as being the key drivers. Abhijit, I was just explaining what the high-level demand themes are. Maybe something.
Sure, and interestingly, I just want to point out one thing, that in terms of the market maturity in North America and Europe lead the cybersecurity spend from an enterprise point of view. APAC is an emerging market based on their technology advancement. Fact that they are still on the cloud journey, so cloud security becomes important. It's a very cost-conscious market, and hence solutions like MDR are on the rise there. Further, their maturity curve is slightly lower as compared to North America, which you see more aligned on zero trust, primarily driven by Biden government's mandate on cybersecurity, securing critical infrastructure and driving zero trust as a security framework. Interestingly, these geographic nuances also lead to specific, industry-specific nuances. And on the next slide, which we see that key industries where enterprises are spending money on cybersecurity happen to be BFSI, typically driven by their mandate of modernization and securing critical infrastructure, trying to also ensure that PII data, brand reputation is protected. For a consumer-facing industry, let's say retail and CPG, we see primarily cloud adoption is also a driver for security, where they are looking to secure workloads on the cloud, as well as secure the supply chain. Security of omni-channel experience is what it is driving cybersecurity growth. On the industry side, if I see energy, chemical, and manufacturing, they've been traditionally laggards and the ones who are spending less on security. But in the recent time, they've seen a lot of IoT or OT convergence happening, where
the proliferation of IoT devices demand is increasing the demand for IoT security and OT security with within manufacturing and energy and utility, where there is a convergence between OT and IoT happening, and more of these OT system moving to IoT. Also want to call out that healthcare and life sciences is another area where cybersecurity demand for medical device security or end device security is seeing a lot. I know there are a lot of challenges, there are a lot of drivers for the cybersecurity. And Rahul, I know it's critical to choose a right partner. We see in all our research that enterprises are leaning more towards the right partner strategy and identifying the right partner and want more out of that partnership. Why don't you try to look into the tenets of this partnership and take this forward?
Absolutely, and that's a good cue to move on to the next section. We will kind of look at what are the key criteria that enterprises are considering to select their cybersecurity services partners. We'll also kind of cover the typical pricing models that we see being observed in the cybersecurity services contracts. And we'll also cover the recent trends in pricing of cybersecurity services. So if you move to the next slide, let's actually begin with a case study from an advisory engagement that we did for a large natural resources company about a couple of years back. The contours of the deal that this client had with its provider were basically these. It was a standalone cybersecurity services relationship, and the vendor in question was a tier 1 global provider. In this contract, there was end-to-end coverage across the security value chain. So it covered right from endpoint security, host intrusion prevention, identity and access management, cloud security, firewalls, email gateways. So pretty much all the next generation themes that are part of a comprehensive cybersecurity framework, they were all there. Now, this interestingly was a semi-asset heavy deal, which basically means that it was not just the services which were being provided by the vendor. To some extent, licenses for products such as CrowdStrike, Netscope, they were also being provided by the service provider. For some of the other products that were part of the cybersecurity framework, for example, products coming from Symantec, Cisco, Fortinet, there it was the client which had directly procured the licenses. So that being the overall contours, the main observations as we looked at that particular deal were there were occasional issues with the service provider quality, but the deal was structured in a manner that there were very little or minimal SLA credits, that were being levied. So they amounted to less than 1% of the monthly fee. And even when there were certain SLA credits, invariably they were getting earned back. That's how the contract was structured. There were a couple of questions raised around the commercial model itself. To a large extent, this was a black box fee model. There was a defined range of volumes for number of endpoints, firewalls, gateways, the EPS volume, etc. But and there was also an element of ARC and Rook pricing for situations where the volume was fluctuating beyond the dead bands. But it was observed that in spite of a reasonable change in the volume patterns over the last 12 months, the variation in fee was very less. It was less than 3%. And the entire fee, which included not just the services element, but also the license component, it had a pretty hefty COLA adjustment clause, amounting to about 7.5%. So that was one instance where, the deal was structured in a way which ultimately was not very beneficial to the client. So after a few slides, we'll talk about how we helped the client restructure this particular contract. But first, let me pose a question to Ricky. Ricky, what are some of the changes that you have seen over the last few months around how these services are consumed and how the contracting is being done?
Thanks, Rahul. Very pertinent questions. I think over the last 2 years, we've seen cybersecurity demand and sort of take off on a spike, right? And some of the key tenets or key trends that we've been observing in the market over the last 2 years, right? So the first and foremost is we've seen we've seen an evolution of how security is being bought in the market, right? So earlier, cybersecurity used to be part of the overall IT infra services deal. They used to combine it and issue one big RFP to a vendor. Now that trend is moving away, right? Now more and more enterprises are looking at cybersecurity as a specialized capability, and they are looking to outsource or looking to RFP it separately. In fact, more so that we're seeing separate pockets within cybersecurity, in fact, outsourced to different vendors, right? You're retaining maybe your traditional security services like network security, application security with your IT infra services vendor. However, maybe some of the more advanced services, be threat management, threat hunting, that going to some of the specialized cybersecurity vendors. So that's one major theme. The other is, I think we alluded to on the earlier slide, right? So and that's a general phenomenon of that we've seen in the market over the last 2 years, right? That's a secular trend of enterprises wanting to move to as a service kind of an offerings, and that trend is also exists in the cybersecurity space. So we see that in the cloud space, where we see enterprises looking to move to cloud to convert their capex to opex based model. The same trend seems to be playing out in the cybersecurity space as well, where let's say third-party system integrators, they are expected not just to provide managed services, but also bring in third-party software, bundle it with their managed services, and give an all-inclusive sort of a commercial model, right? And what that does is, it does two things. One is that the traditional SI vendors who are traditionally very strong in the managed services space, they now need to think of actively forming partnerships. They need to proactively work with some of the security vendors to kind of bundle their managed services offerings around it. The other thing is that it has also expanded the pie for some of the very focused cybersecurity product vendors to come into the services space. For example, if you take an example of MDR, right? So MDR, earlier, it used to be all about, okay, product vendors are separate, managed services vendors are separate. Now, if you think of MDR, it's like a combination of these two. And that's where we see vendors like even CrowdStrike, who's traditionally a very strong product focused vendor, getting into the space of MDR, where they need to bundle services along with their products. Now, how they do it is a different question altogether. We're not trying to address that, but then that definitely is playing out in the market. The third is enterprises have become prudent about how they spend on security, right? And they now expect transparency in terms of what are they buying, how much are they buying, how does that how does the price fluctuate with respect to volumes, right? So they're looking for more and more unit-based pricing models, be it price per EPS, price per user, price per device, and so on. And the fourth is finally, in spite of the pandemic, right, during H2 of 2020, where we saw pricing decline and there was a big drop in demand, cloud and security were two areas which continue to command a premium in the pricing, right? Command a premium pricing. And that we expect that the upward trend for this will continue to go forward even in the next few cycles. We'll talk about some of the pricing trends that we're seeing on the subsequent pages. So on the next page, we talked about a few key trends that we've observed in the cybersecurity outsourcing market. Now that helps shape some of the key partner selection criteria that we observed in the market, right? So first and foremost, when an enterprise is looking at a cybersecurity partner, the first and foremost criteria they look at, and is very obvious, is the quality of the solution, right? How best you can meet the required solution. How are you able to, what is your delivery capability? How is your partnership strategy? How do you propose to meet this solution? How do you propose to meet this requirement? So that then by foremost is the most important criteria. The second and a related one is sort of your case studies and references, right? So clients are not just looking at, okay, you've done something similar in some other industry. No, we want suitable references and case studies where you've done something similar in a similar industry. For example, have you done something similar in the insurance space or in the capital market space, right? So there's a lot of focus on getting the right case studies and references when it comes to buying or partnering with a cybersecurity partner. The third is, and we discussed about this, there's the more focus on transparency, more focus in terms of unit-based pricing models, ability to offer OPEX-based pricing models. So vendors were able to do that, of course, when in this market. And finally, I think the interoperability, right? So this becomes now, we're talking of cybersecurity as a complex ecosystem of multiple partners. You need to work with different cybersecurity product vendors. You need to work with your managed services partners. You need to work with even your incumbent partners in the organization. You need to work with your application services partners, your infrastructure services partners, and at times even with the GPS organization, right? So your ability to work interoperate in a convenient manner with all of these different ecosystem partners kind of becomes very important when the partner is getting selected. So we touched upon the point around how pricing continues, how cybersecurity continues to command a premium pricing in the market. In the next page, we'll see some numbers to corroborate that fact, right? So if you see the charts, there are two charts on both these, two curves on both these charts. One represents the pricing for traditional skills, and one represents pricing for, let's say, cybersecurity skills. Now, if you see these two curves, up well until H2 of 2019, they were almost on a similar trajectory. Cybersecurity still commanded a bit of a premium, but that wasn't very hefty, more like maybe 2 to 5% at the max. However, if you see from H1 2020 onwards, cybersecurity continued to grow on an upward trajectory across onshore and offshore. And we saw almost 2 to 3% price increase almost every 6 months. In fact, even for the rest of the year, we are anticipating prices to go by another 3 to 5%, considering the big supply-demand gap that we're seeing. And Avijit and Rahul have spoken enough about the sort of the demand-supply mismatch we're seeing in this market. So that will continue to play out, and we anticipate a further increase in the pricing premium that cybersecurity skill sets are commanding in this market. However, if we look at if we move to the next slide, and if we look at how things are looking like on the managed services, right? For example, although the labor rates or the FT rates might be going up, on the managed services side, if you look at things around network security or endpoint security, when it comes to transaction-based pricing or unit-based pricing models, the overall price per unit is declining, right? If you look at what we saw in H1 2019, which is about 3 years back, and what we're seeing now, there's almost a 20% decline in unit-based pricing models. For example, the example could be that if you're selling, if you're managing a firewall, let's say $100 in 2019, now it's closer to $80. So that's the quantum of decline. And then decline is partly due to the fact that there is increase in offshoring, right? Of course, clients are becoming much more comfortable post-COVID. They are okay with offshoring. They're okay with offshoring to as much as 90 to 95% of the effort being driven from low-cost locations. So that obviously contributes to the point being vendors being able to pass on some of the benefits in terms of unit pricing. The other is the evolution in terms of technology, better products being available, and that kind of results in higher productivity of the resources of the security analysts who are managing some of these solutions for you. So that also kind of leads to more competitive unit-based pricing. So this trend we anticipate will continue to happen at least in the traditional security services space, be it endpoint security, network security. This will continue to play out. However, I think we believe the quantum of this decline will kind of gradually start to flatten out as we move forward. If we so we wanted to also run a quick poll in terms of understanding what sort of pricing mechanisms you are using in your cybersecurity contracts, right? So we've seen enterprises use both fixed fees and time and material, as well as move to more resource unit-based pricing models. We request you to select all of the one, or select one, any of that applies to you. Okay, we are closing the poll in about 3, 2, 1. Okay. Yep. So as the results indicate, about 58% of the respondents here also suggest that they're using a combination of the above pricing models, right? And that kind of makes sense, because you may be using fixed fees for some of your cybersecurity services, such as be it let's say application security, which is pretty complex, whereas you might be using time and material for some of the more security consulting kind of work, or be it some of the more high-end project-based work. And then you just move to a resource unit-based pricing model for some of the more commodity work, right? Be it network firewalls or SIM as well, where we're seeing EPS-based pricing models to be driven. So this kind of makes a lot of sense and corroborates what we are seeing in the market as well. If you move on, the next page also talks about something similar that we just observed. So there is a lot of emphasis and movement towards more unit-based pricing models when it comes to cybersecurity services. For example, we touched upon this. For example, endpoint security, clients are asking for per endpoint based pricing metrics, or for when it comes to SIM, clients are asking for per EPS based pricing model, or it could be per TB of log storage, or for something like threat hunting, it could be a fixed fee, but based on the size of the environment, right? Or a more complex mechanism to buy this would be price per configuration item. So yes, there's a lot of emphasis, and vendors are expected to be able to meet some of these requirements. Now, but however, this has its own challenges, right? For example, if you move to the next page, we've taken an example of MDR, right? Even though there's a lot of emphasis and we are talking about it, that there should be a movement towards unit-based pricing model, there are certain inherent challenges. And first and foremost is that the definition of some of these is not consistent across the market. First, if you look at MDR, there are 4 different types of vendors who are trying to offer MDR in different sort of pricing model. For example, we see companies like CrowdStrike and Red Canary offer price per endpoint for MDR. We see Sophos offering price per user for MDR. We see Rapid7 and Arctic Wolf offering price per asset or per node for MDR. And then we see the traditional SIs using a combination of all of these different pricing models, or going back to one of the 3 that we mentioned above. So the point is that, and the fact that it's not just there's a difference in the pricing model. There could be an underlying difference in the offerings itself, right? So we cannot just comment that, okay, CrowdStrike and so forth have the same offering, and even then they're offering different pricing models. That's not true. They may have different offerings. There may be differences in terms of what they offer as a product or a solution. And that kind of also leads to the fact that they're using different pricing models. So this makes it a bit more complex when it comes to enterprises, right? How are they supposed to evaluate 2 different vendors when they see 2 different pricing models? And how are they supposed to evaluate what are the subtle differences in the underlying solution itself? So this is, and then this also gets corroborated. If you look at the next slide, this gets exemplified or added with the lack of consistency of definition, right? For example, we often see clients using a per EPS based pricing model for SIM. Now, we've often seen, okay, how do you define that the price per EPS, right? Is it peak EPS? Is it average EPS? And then there is a lot of concern among enterprises also in terms of, is it the right metric to go over, right? For example, one of the CISO organizations we were working with, they said that the challenge that they're dealing with is with a particular vendor is that they feel that the vendor is incentivized to drive up the EPS per second without actually tuning out the alarms, meaning that they feel that they're paying more for less work, right? The concern that they had is, how do we encourage actual investigation into the alarms without actually paying more for it? So there are these concerns in terms of how do you define, how do you measure some of these pricing metrics, which leads to a lot of challenges around implementing some of these unit-based pricing metrics. And then finally, if we look at the impact of automation, and we've spoken enough about automation in other services, be it managed services, infrastructure services, application services. Even when it comes to cybersecurity services, well, automation has played a key role in terms of the overall whole offshoring and the whole outsourcing delivery model. Now we're seeing more machine learning based event correlation and reduction of false positives, enabling service providers to be able to reduce the amount of FTE effort required to manage the SIM environment, or for example, using some of the advanced solutions to create a playbook to automate some of the security tasks through a SOAR platform, or it could be a policy-based patching solution, which will kind of push the patches onto systems automatically across the environment, right? So all of these solutions are impacting the way you are able to deliver, say, cybersecurity services and are making the whole delivery model much more efficient. At an overall level, enterprises or clients are expecting at least a 20% reduction. Let's say if you are contracting for cybersecurity services, we see anywhere between 15 to 20% reduction in the annual contract value over the next 3 years. So right, that is because of a multiple of these levers and solutions that we see vendors implementing as part of these deals. Finally, I think so. Using all of these solutions, so what was the final outcome of the engagement that we were doing with this particular client?
Yep. So in addition to some of the mechanisms that Ricky talked about, we kind of applied all of them and broke up the contract in that particular case study in the following way. Firstly, the black box fee, which was there, we broke it up into logical components, which included the ongoing PMO charges, any one-time transformation charges, platform tool and license costs, and most importantly, the run and the management fee. Now, within these, we broke up the fee components to the lowest unit level, similar to what Ricky mentioned. For example, on the antivirus services side, there was a pricing for per endpoint. For vulnerability management, it was on a per IP managed. For identity and access management, it was on a per user basis, so on and so forth. Next, we perform benchmarking at a granular level, looking at all of these individual resource units. We also looking at what ideally a PMO, a charge, or a transformation charge should be in a large scale engagement. And for maximum benefits, we kind of ensured that even the security platform and tool license costs were actually benchmarked. Now, all of these together led to a pretty sizable benefits being realized by the client. There was a reduction of the fee by about 16% over the next 5 years of the contract. So overall, moving away from a black box structure led to a good amount of fee reduction, and further fee improvement was kind of ensured, because of the per RU pricing model that was adopted for the management services. So with that as the cue, if you go to the next slide, what we also wanted to share with the buyers or essentially the enterprise side of our participants is, if you want to get a glimpse of some of the benchmarking work that we do for cybersecurity, you can just click on this particular poll, indicate what all geographies you are interested in getting the complimentary price benchmarking for. We would essentially share with you benchmarks for 3 different roles across 3 different geographies, and on a complimentary basis, give the benchmarks for these areas. So closing the poll in 3, 2, 1. All right. We'll make a note of all the responses entered by the participants. Moving on. Now, as you would have already gauged by now, at Everest Group, we have a lot of experience doing benchmarking of cybersecurity services contracts for our clients. This includes, our advanced benchmarking capabilities that cover pretty much all the cybersecurity segments, including endpoint security, network security, digital identity, threat management, cloud security, application security, so on and so forth. And within each of these segments, there is a pretty strong coverage of the underlying functions. For example, if you talk about application security, which includes SAST, DAST, MAST, as well as application penetration testing. For something which is very next gen, for example, cloud security, this covers services such as cloud access security brokers, even container security. So essentially the benchmarking can be done across pricing metrics for both FT based as well as output based constructs. So if any clients, any participants in the webinar, if they have a requirement around detailed benchmarking for their existing cybersecurity contract, please feel free to reach out to us. And Abhijit, we want to cover how we can help enterprises in their cybersecurity journey. You're on mute right now.
Thanks, Rahul. So in terms of our enterprise offering for cybersecurity, we typically look into your operating model, compare it to the best-in-class industry model, identify potential gaps, and see how we can help you build a future-ready cybersecurity organization. It could be for a specific segment, as we were, talked in the market of data security segment, or cloud security, or identity and access management. Similarly, we have deep insights on how you can work best with service providers or your outsourced technology vendors. As part of our proprietary peak metric assessment framework, we evaluate service provider capabilities on different cybersecurity functions, like their overall cybersecurity, their managed security capabilities or their MDR services capability. Feel free to reach out to us or reach out to me on my email, and we can happy to have a conversation on this. All right, Rahul.
Fantastic. Thanks, Abhijit. With that, let's maybe just spend a couple of minutes on the Q&A section. We have received a few questions which we can possibly cover. The first one is, what is the most common area that is not explored in depth with vendors before decisions are made? Ricky, want to address that?
Yeah, sure. I think we often see enterprises when it comes to partnering with the service providers for cybersecurity needs. They often fail to appreciate the fact that they need to work in a very complex ecosystem of different partners. So that's a parameter that we see not a lot of enterprises thoroughly evaluate potential vendor on. So that's something that we see that enterprises should really focus on and evaluate their capability and their ability to work in a multiple complex ecosystem partnership. So that's one thing that I'll recommend clients watch out for. I think, Rahul, we can take this question around how do you account for insurance to hedge against cybersecurity risk? I think because it's a very pertinent topic when it comes to cybersecurity services. And that's a requirement that we see in a lot of outsourcing contracts, not just cybersecurity contracts, but any outsourcing contract where clients are expecting the provider to have cyber insurance coverage. In addition, they're also buying cyber insurance themselves, right? That also partially explains why the cyber insurance market itself has grown significantly. Just as a high level now, at a high level, we forecast the cyber insurance market to touch nearly $14 billion by the end of next year, which is almost a 2x from what we saw in 2020. But to answer your question, but buying that doesn't mean you are safeguarded or hedging against some of the non-monetary risk, right? So such as the loss of reputation and trust, which goes along with a cybersecurity attack. So plus, in addition, buying cyber insurance at times requires enterprises to actually implement certain audits and have certain controls in place, right? So it doesn't mean that if you buy cyber insurance, you are safeguarded against all risk. You still need to have certain controls, certain audits to be done so that your insurance, is viable and exists, right? If failing which, your premiums for insurance might actually go through the roof, really killing the whole objective of buying insurance in the first place.
Okay, great. So we are almost at the end of the hour. Just one final message to get a glimpse of our recent blogs as well as published reports on cybersecurity. Please have a look at our website. And if you have any further questions on the webinar, please reach out to Abhijit, Ricky, or me. With that, let's wrap it up. Thank you for joining, everyone. Goodbye and have a good day.
Thank you.